Welcome to Far From Wall Street. This is Michael McCall. St. Patrick's Day 2017 brought news that the U.S. Index of Leading Economic Indicators hit a high mark last seen over a decade ago. The LEI is a composite of 10 indexes designed to signal peaks and troughs in the business cycle. It's a good forward-looking indicator for the economy. In February, for the third consecutive month, the LEI surged 0.6%. It was the sixth straight monthly gain and a clear indication that a significant acceleration has been underway. A key component of the LEI, the forward-looking new orders index, rose more than any of the other sub-indexes in February. The pipeline of new business is loaded and expected to hit the economy in the weeks ahead. Business cycle economists at the Conference Board, which tracks the LEI, expect moderate growth and an improving outlook for 2017. Good news about the LEI followed a release earlier in the week concerning the Consumer Price Index, which is a measure of inflation. The CPI rose sharply to 2.8%, but other measures of inflation were closer to the Federal Reserve's target rate of 2%. Janet Yellen, chair of the Federal Reserve, said at a press conference on Wednesday that the central bank had accomplished its legislatively mandated mission of promoting full employment while keeping inflation in check. Interest rates and the economy have fully recovered from the 2008 near collapse of the world financial system. With economic conditions back to normal, Yellen said she expected the Fed to raise rates gradually in the months ahead. For investors, Yellen's comments make it prudent to expect long-term bond prices will fall in the months ahead, and short-term fixed income investments, which offer yields that rise with interest rates, will be more attractive. A long-term bonds price falls more than a short-term bonds price when rates rise. The longer a bond's maturity, the more its price will drop when rates rise. Despite the risk that rising rates might slow the economy and growth of corporate profits, the Standard & Poor's 500 stock index has been hovering near its record high. Stocks have soared nearly 12% since the presidential election on November 8, 2016, because economic news has been so positive and investors have begun to expect a major tax cut to be enacted by Congress. With political intrigue dominating headlines again last week, however, uncertainty surrounds the enactment of health care legislation and the promised tax overhaul, and a correction of 10 or 15% is possible at any time. So, in closing, we remind you that while the little man delivered good news this St. Patrick's Day, leprechauns can be tricky, especially when it comes to financial matters. Please contact us with any questions or to set up a meeting. And don't hesitate to share this video with friends who might benefit from my work. Remember, it's great to be far from Wall Street.